Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, if you like looking at undervalued assets, learning about financial investing type stuff, more of a financial education, this is the channel for you. Subscribe to the channel. Give me a thumbs up for the content, and then leave comments below about anything, questions, whatever you got. This presentation, I'm going to go over PGM metals investing. What I see is a large opportunity in platinum because of the large deficits in rhodium and palladium. We're going to go over all of this stuff, not so much the rhodium side, but more of the palladium side, and show you where these things are used, what the demands are, what the deficits could look like, and why I think, why I am a big investor in platinum. So let's jump in here and look at the opportunities ahead of us. So this is PGM metals investing. The first one I have is the Powertrain. And really, when you look at this stuff, and all I'm looking for is the Powertrain and the PGM content. So diesel, conventional diesel, it has high platinum content, low palladium content, no rhodium. And some of these LNTs have some rhodium. So some rhodium to no rhodium, but mainly high platinum. The gasoline side has high palladium, low to no platinum, and low rhodium. But some rhodium is essential. You can't eliminate it completely. Then you get all these diesel mile hybrids and all this other stuff. It's basically all the same as these first two. You go all the way to the bottom, fuel cells. They're targeting a 10 to 15 gram of platinum in those. They contain no PGMs in battery electric vehicles, and all the hybrids are just some sort of content loading similar to these first two. So really, the takeaway here is platinum is heavily in diesel, and palladium is heavily in gasoline conventional engines. Platinum is and can be a substitute for palladium. So if palladium gets out of control in terms of pricing, they will substitute platinum instead of palladium in gasoline convention engines. Here is the U.S. auto catalyst market volume by application, 2014 to 2025. This is the diesel market in the bottom there. This is the LDV gasoline market, and then the HDV market. The HDV is, let me look here. I don't know what the HDV is, but the other ones are the LDV, which is the low diesel vehicle, like the hybrid stuff. So you're looking here, we've got a nice big, looks like ramp up of LDV gasoline, which uses palladium. This diesel has a ramp up, which is platinum. I don't know what the HDV is on this one. But it's going up as well. A lot of palladium demand here, which will eventually be substituted with platinum if the palladium price gets too high in relationship to platinum. This is the PGM use in car sales. This is looking backwards at the PGM AutoCat demand, which is platinum, palladium, and rhodium combined. And you can see these going vertical. And it's going vertical faster at the rate of auto sales because they're loading them more and more in the catalytic converters because of more stringent emissions. So as the more stringent emission standards come into place, these catalysts are getting loaded with more platinum, palladium, and rhodium. And you can see that this is China per vehicle PGM loading. You can see it that the grams per vehicle over time has really been ramping up. And if you look at 2019, they're really ramping up the use of palladium. And that's why the price of palladium's been going through the roof. But in the back of our minds as investors, we know that platinum can substitute palladium. So over time, you're going to see more platinum usage, and you're going to see the price of platinum and palladium converge at some point. That ratio. So this is the region, NOx, CO2. I've got EU, China, North America. We've got steady increase in palladium loadings in North America. In China, we've got plus 40% palladium loadings, plus 50 to 100% rhodium loadings, and driving higher palladium and rhodium prices. It's an incentive for substitution to platinum. Annual fine, and between this incentive to lower CO2 via hybrid and battery electric vehicles in the European Union. And then here we've got RDE on-road emissions testing, higher loadings of palladium, plus 175,000 ounces. So palladium is really getting hit here in terms of a demand side. So let's look at this is the market balance, supply demand of palladium. This is your balance in thousands of ounces. This is your time. And you can notice that we had a surplus in palladium, which would have been a great time to buy back here. And then we've got the deficits coming. The bottom in 2009 was here at $178, and now we're getting into the mid 2000s, upper 2000s again in 2021. This is the market deficit showing that the deficits are growing and that we're going to have to start substituting other things in. I think that's why this is coming back, is because they're expecting substitutes to platinum of palladium. This is the palladium inventory for the entire kind of world, and it's been drawn down, and it stopped at 2018, but it is very low right now, and the market is very tight for palladium, and that's why you're seeing the price skyrocket. This is the cumulative change in global platinum inventories, and it stopped at 2015, but I just wanted to show you kind of the overall trend. It is down, and it's getting sucking up. The inventory is getting sucking up by the market. This is the looming undersupply. This is the 8 million ounce a year platinum market. 6 million is mined from new mines, and 2 million from recycling. It says the 8 million ounce a year platinum market will see large deficits from 2023. Here's 2021. We get a small deficit in 2022, and then you see large deficits coming to soak up the inventory. And just an FYI, looking backwards, we had a little bit of a surplus here. We had 4.3 million ounces in inventory, which is really small. Then we had large deficits in 2013, 2014. We had deficits all the way through here, and we were sitting on 2.1 million ounces around 2016. And we had the price decline, even though we were eating through inventory, which is a very rare anomaly. We don't have this much of a draw on inventory and have prices decline from 1,700 to 1,000. So we're going to continue to see deficits in platinum eating through inventory, which will eventually lead to higher prices. This is the palladium autocat demand, and this is what happened in the early 90s. The palladium peaked at 1,000 an ounce, and then what you saw is when palladium was going up and platinum was cheaper, that you saw substitutions happen. And what happened was, if this is the platinum autocat demand and this is the palladium autocat demand, these eventually would converge and be very similar in terms of volume sold. So what you're going to see, and this happened in the 90s and early 2000s, is you're going to see platinum be substituted for palladium, and the autocat demands will converge in the future and look something similar to the early 2000s. That's my opinion. And the substitution here, in May 2019, Johnson Matthey said it expected that the use of platinum and diesel autocatalysts to replace palladium could grow by tens of thousands of ounces in the short to medium term. The current palladium price is unable to stimulate investment in growth, as these producers know platinum is a far more likely mechanism to rebalance the market than additional palladium supply. So you're not going to see increased supply of palladium. Rather, you're going to see the market substitute to platinum. That is what the producers think, and that's what Johnson Matthey thinks, which are some of the major decision makers in this type of market. The palladium and platinum substitution, the magnitude of substitution is also becoming more widely considered. Some 9.7 million ounces of palladium are used annually in vehicle emissions control, while only 3 million ounces of platinum are used in vehicles. Replacing only 5% of the palladium with platinum at a 1-to-1 ratio, also now more widely known, would require over 450,000 ounces more of platinum and less of palladium. This will do little to, I don't even know what that word is, ameliorate the palladium deficit, yet creates a significant demand increase in platinum. So this is the price difference here, just looking at it from a platinum to palladium price, not from a ratio. I'll show you the ratio next. But you can tell whenever we have these large extremes where palladium gets far more expensive than platinum, that the palladium price reverses and that eventually the platinum price goes into a bull market and reverses as well. The normal market balance is where platinum is more expensive than palladium. on a 2 or 3 to 1 basis, which means 1 ounce platinum can buy 2 or 3 ounces of palladium. That's more of a normal market balance. And right now we've got this huge anomaly where palladium's way up there and platinum is down in the dirt. So that's a very large anomaly over history. And looking at it from a ratio perspective, if you were to plot it as a ratio, you'd say, well, it's about an average of 3 roughly, 3.5. So that means that 1 ounce of platinum can buy 3.5 ounces of palladium. But right now, palladium is getting close to 3 ounces of platinum. So we're way down here. We're at 0.5, way down there. So it's actually about 2 right now, the numbers. So this is the real time here. This is 0.47 is the real ratio right now. And I would say that platinum is the opportunity here. Palladium is continuing to move to the upside. It broke to the upside here recently on its price charts. You can see that there's a whole bunch of demand for palladium in auto catalysts. And whenever this happens, whenever you get these large divergences between these two metals, they start substituting platinum for palladium, which then means that the palladium price will come under pressure and platinum will come up, and eventually they'll kind of meet each other. From a long-term perspective, platinum has usually been more expensive than palladium, and it's usually been about 3 times more expensive. That's kind of the average. If you guys like this content, subscribe to the channel, give me a thumbs up, leave comments below on what you guys think. Let me know. I love reading your opinions. And thank you for listening. This is Finding Value.